All right, get ready because today we're going to dive deep into investing.
Oh, yeah.
But don't worry, this isn't going to be some boring lecture on stocks and bonds.
Definitely not.
We're going to explore how to turn your money into a wealth-generating machine.
I love that. So many people think investing is just for Wall Street, but it's for everyone.
Exactly. And I'll admit, I used to be totally intimidated by all the jargon.
Yeah.
I remember trying to time the market based on some random Reddit thread.
Oh, wow.
Yeah, it did not go well.
That market timing, as so many people fall into that trap.
It's a trap.
But that's why we're here, to equip you with the knowledge to invest smarter.
I love that. Let's start with the basics. What exactly is investing?
It's more than just stashing cash under your mattress.
Definitely.
It's really like planting seeds for a future harvest.
Okay.
It's putting your money to work to make you more money.
Gotcha. That makes sense.
And building wealth to achieve your dreams, early retirement, a dream home, that kind of thing.
Yeah, all those sound great.
Peace of mind.
Peace of mind, but there are so many ways to plant those seeds. So
Right.
what are the main ways people can explore?
Our sources talk about 4 main types of investments: stocks, bonds, mutual funds, and ETFs.
Okay, so let's break those down.
Yep.
Starting with stocks, those always seem a little, I don't know.
Mysterious.
Yeah.
Yeah, stocks are basically like owning a tiny piece of a company.
Oh, okay.
You own a small slice of, let's say, Apple.
Oh, okay.
As Apple grows and does well, the value of your slice grows too.
So if Apple's doing well, my investment's doing well. What if they have a bad quarter? Does my slice shrink?
Exactly.
Okay.
That's the thing. Stocks can grow a lot, but they're also riskier. That's why people like Warren Buffett, he always says, think long term.
Oh, yeah, I've heard that quote before.
Like he said, if you aren't willing to own a stock for 10 years, don't even think about owning it for 10 minutes.
That's a good one.
Yeah. So it's about finding companies you believe in and letting your investment grow over time.
Yes.
Okay, so no get-rich-quick schemes with stocks.
No.
All right, so now we've got bonds.
Called bonds, these are a little different.
Okay.
They're more about lending money.
Okay.
So you lend money to a company or even the government,
Okay.
and they pay you interest on that loan.
So it's like they're borrowing money from me.
Exactly.
Okay, and I'm getting a little kickback for it.
Yes.
Okay, so bonds are like the reliable friend in your investment portfolio.
Yes.
Not as flashy as stocks, but a little safer.
I like how you put that. Bonds for stability, stocks for growth.
Ooh, I like that.
They both have their place.
All right, so that covers stocks and bonds. Now, what about mutual funds and ETFs?
Yeah, those can be a little confusing.
I always get them mixed up.
Okay, so imagine you walk into a giant supermarket, thousands of products.
Oh, yeah, it's overwhelming.
It's a lot. So mutual funds are pre-made baskets of groceries.
Okay.
You got your stocks, your bonds all mixed in.
Oh,
And experts put them together. So you get a good variety.
so I don't have to pick out everything myself.
Exactly. Instant diversification.
That's a lot less overwhelming.
John Bogle, he founded Vanguard.
Yeah.
He had a great way of explaining it.
What's that?
Don't look for the needle in the haystack. Just buy the haystack.
Oh, I like that one too.
So mutual funds are like your haystack, full of potential winners.
Heck yeah. All right, so where do ETFs fit into this?
Okay, so if mutual funds are the pre-made baskets,
Yeah.
ETFs are like the self-checkout aisle.
Okay, I like that.
You get a similar basket of investments,
Okay.
but with lower fees.
Oh, even better.
And you can buy and sell them anytime during the day, like stocks.
If I want to adjust my portfolio during the day, ETFs give me that flexibility.
Exactly.
Yeah.
A lot of experts recommend them for beginners. Burton Malkiel, he wrote A Random Walk Down Wall Street.
Oh, yeah, I've heard of that.
He recommends them too.
Cool. All right, so this has been super helpful. Now, before we get into actually investing money, there's one more thing I want to talk about.
Yeah.
Compound interest.
Ah, yes.
I've heard it called the eighth wonder of the world.
It's pretty amazing.
But to be honest, it still sounds a bit like magic to me.
Yeah, it's like a snowball effect.
Okay.
Imagine investing just $1,000 today
Okay.
with an average return of 7% over 30 years. That could grow to over $8,000.
Wow, that's a lot more than $1,000.
It is. It's like your money is making babies.
Okay.
And then those babies are making babies and so on.
The whole financial family.
Yes, exactly.
All right, so how does that actually work? Because my money's not literally multiplying.
Compound interest means you're earning interest not just on your initial investment, but also on the interest you've already earned.
Okay.
So let's say you invest $100, it earns 10% interest. You now have $110.
Okay.
The next year, you earn 10% on $110. So that's $11.
So it keeps growing faster.
Exactly. The longer you let it sit, the more powerful it gets.
So starting early is key.
It is. Like planting a tree, The best time was 20 years ago. The second best time is now.
Yeah, that makes sense. Don't wait to start.
Exactly.
All right, I'm definitely feeling motivated to get started, but where do I even begin?
That's a great question, and it's something we'll cover in the next part of our deep dive.
All right, can't wait.
We'll talk about the essentials of getting started with investing.
Awesome. See you in part 2.
That was good.
Welcome back to our investment adventure.
Yeah.
In part 1, we talked about the basics of investing, different types, and even compound interest.
That's right. We're ready to start building that wealth.
Yeah, but before we jump in and start throwing money into the market,
Yeah.
let's talk about managing risk.
Oh, yeah. Risk is a big one.
Yeah, how can we approach risk without getting too scared?
The first step is to figure out your risk tolerance.
Okay, risk tolerance.
Yeah, it's like some people love those risky investments, like emerging markets or startups.
Yeah, high risk, high reward.
Exactly.
And some people, they like to play it safe.
Blue chip stocks and bonds.
Yeah, so it's about matching your investments with your comfort level.
Exactly.
Okay, that makes sense.
Peter Lynch,
Yeah.
he said, know what you own and why you own it.
Oh, yeah, that's a good one.
So understanding your investments is key.
And knowing your risk tolerance can also help you avoid making bad decisions
Yes, definitely.
when the market gets crazy.
Yeah, that's right.
And that leads us to another important point, avoiding market timing.
Oh, yeah. Market timing is a trap.
It is.
The market is like trying to predict the weather.
Yeah, good luck with that.
It's impossible to get it right every time.
Yeah, so trying to buy low and sell high, that's more like gambling.
It is. Burton Malkiel had a good quote about this.
What's that?
He said, time in the market beats timing the market.
Oh, I like that one.
Yeah, focus on staying invested for the long term.
Okay, so patience and discipline are key.
Yes.
But what about when the market takes a dip? It's hard not to panic.
That's where your emergency fund comes in.
An emergency fund, like a safety net.
Exactly. It's there for unexpected expenses, job loss, medical bills.
So I don't have to touch my investments.
Suze Orman recommends having at least 6 months of living expenses saved.
6 months, okay.
Yeah, it's important.
So even when things are going well, are there ways to boost our investments?
Absolutely.
Like what?
Reinvesting dividends.
Oh, yeah, dividends?
It's like adding fuel to your investment engine.
Can you remind me how those work?
Yeah, so imagine you own a piece of a fruit tree.
Okay.
Dividends are like the fruit that the tree produces.
Okay.
When you own stock in a company that pays dividends, you get a portion of the profits.
So it's like getting paid just for earning the stock.
Exactly. And here's the cool part. You can reinvest those dividends to buy more stock.
So my investment keeps growing and generating more income.
Yes. It's a cycle of growth.
Wow, that's awesome.
Benjamin Graham was a big believer in reinvesting dividends.
Okay.
He said it's one of the best ways to build wealth.
So we've covered a lot of ground here.
We have risk tolerance, market timing, emergency funds, dividends.
Yeah, but there's still more to learn, right?
There is. And in the final part of our deep dive,
No.
we'll share even more strategies and resources.
Awesome. Can't wait for part 3. We're back for the final part of our investing deep dive.
Part 3, that's right.
And I gotta say, I'm feeling way more confident about investing now.
Good. I'm glad to hear that.
But there's so much information out there. Where do we even go from here?
That's a common feeling.
Yeah.
But don't worry, we're here to help.
Okay, good.
Think of us as your guides, pointing you in the right direction.
Okay, I like that. So what are some good resources for new investors like me?
There are some classic books everyone should read.
Okay, like what?
We've mentioned a few. The Intelligent Investor by Benjamin Graham.
Okay.
A Random Walk Down Wall Street by Burton Malkiel.
Okay.
And One Up on Wall Street by Peter Lynch.
Okay, got it. Those are on my list now.
They're great for foundational knowledge.
Awesome. But what about something a little, I don't know, easier to digest?
There are tons of websites and blogs out there.
Oh, yeah.
Investopedia is a great one.
Okay.
They explain everything really clearly,
Oh, it's good.
from basic terms to more advanced stuff.
Cool. And what about the Motley Fool?
Oh, yeah. The Motley Fool is great, too.
Yeah.
They've got free content and paid subscriptions.
Okay.
They cover all sorts of topics and even give stock recommendations.
Okay, we've got books, websites. What about keeping up with current events and the market?
Ah, yes. For that, you'll want to check out some reliable financial news sources,
Okay.
like the Wall Street Journal,
Okay.
Bloomberg,
Yeah.
and the Financial Times.
Okay, those are all good ones.
Yeah, it's important to stay informed,
Yeah.
but don't get too caught up in the day-to-day fluctuations.
It's easy to get sucked in.
It is. Remember, investing is a long-term game.
Long term.
Focus on your goals and don't let the short-term noise distract you.
Okay, good advice. And speaking of seeking guidance,
Yeah.
When does it make sense to talk to a financial advisor?
That's a great question. A financial advisor can be super helpful,
Okay.
especially if you have complex financial needs
Right.
or you're nearing retirement.
Okay.
They can create a customized plan for you,
Okay.
manage your portfolio, and help you make those big financial decisions.
It's like having a coach for your money.
Exactly.
This has been an awesome deep dive.
I agree.
I'm feeling way more confident about investing now.
That's great. Remember, investing isn't just about making money. It's
Right.
about creating a life of freedom and opportunity.
Yeah, taking control of your finances.
Exactly, making your money work for you.
That brings us to the end of our deep dive.
It does. Thanks for joining us.
We hope you learned a lot and are excited to start investing.
Yes, remember to keep learning and keep exploring.
And most importantly, keep investing in yourself and your future.
Absolutely.
Until next time, happy investing fun.